America is losing its grip on the world's coffee markets, and the consequences could hit your morning cup harder than you think. 48 U.S. coffee shipments were rejected overnight, leaving businesses scrambling and consumers bracing for skyrocketing prices. Meanwhile, Brazil is quietly landing billion-dollar deals, dominating markets that were once considered America's domain. This isn't just a story about beans, it's about power, trade, and who controls what you drink every morning. Before we dive in, hit that subscribe button and turn on notifications. You don't want to miss the global trade shifts that could redefine your morning coffee forever. For decades, the United States has been a major player in the coffee trade, exporting millions of pounds every year. American coffee producers have relied on established trade routes and loyal partners to maintain their presence in Europe, Asia, and the Middle East. But in 2025, everything changed. A wave of rejected shipments and new international deals has sent a clear message: Brazil is taking over, and Washington might be powerless to stop it. This video will break down exactly what happened, why it matters, and how it could reshape global coffee markets for years to come. The rejection of U.S. shipments. 48 shipments of U.S. coffee were turned away from ports in Europe and Asia in a single week. Customs officials cited a mix of quality inspections, regulatory paperwork, and shifting trade priorities. But experts say the rejections aren't random, they're part of a broader move toward sourcing coffee from Brazil. The sudden loss of access to these markets has sent U.S. exporters into crisis mode, leaving storage facilities full and contracts delayed. Brazil's billion-dollar deals. While the U.S. struggled, Brazil was quietly signing deals with international partners worth billions of dollars. Countries in Europe, the Middle East, and East Asia are increasingly sourcing premium Brazilian beans over American coffee. These agreements aren't short-term, they're multi-year commitments that lock in Brazilian dominance for years to come. Analysts warn that if this trend continues, U.S. coffee could be permanently sidelined in markets it once dominated. The quality factor. Brazil's premium coffee isn't just cheaper, it's highly prized for taste and consistency. Specialty roasters in London, Tokyo, and Dubai have praised Brazilian beans for their uniform flavor and sustainable production practices. American coffee, by contrast, has struggled with inconsistent quality and rising production costs. As consumer preferences shift toward high-quality, ethically sourced beans, Brazil is positioning itself as the world's preferred supplier. Rising prices, trade policy, and consumer trends. U.S. coffee prices are climbing as rejected shipments and disrupted supply chains take their toll. Experts say tariffs, regulatory delays, and inconsistent enforcement have made American coffee less competitive abroad, while Brazil's investment in exports and marketing strengthens its global position. This highlights how trade policies directly affect both industries and consumers. Global coffee drinkers increasingly value origin, sustainability, and quality. Brazil has leveraged this, building a premium reputation abroad, while U.S. producers focused on volume are losing ground. The economic impact is serious. American exporters face revenue losses, jobs are at risk, and local economies could suffer, while Brazil gains investment, stronger trade ties, and global influence. Global supply chains, investment, and infrastructure. Coffee trade isn't just about beans, it's about logistics, contracts, and supply networks. Brazil's investment in shipping, storage, and port facilities has ensured that their coffee reaches international markets faster and more reliably than U.S. shipments. The reliability factor is key. Buyers are choosing certainty over tradition. If the U.S. can't match Brazil's efficiency, it risks losing more market share every year. Brazil's investment in coffee-related infrastructure, warehouses, ports, and logistics is paying off. Multinational buyers prefer the reliability of Brazilian exports over American shipments. The U.S. is facing the dual challenge of rebuilding trust and investing in infrastructure, but catching up will require time and significant funding. Political pressure and strategic response. U.S. policymakers are under pressure to respond. Lobbyists and industry groups are urging Washington to negotiate new trade deals and streamline export regulations. But the political machinery is slow, and Brazil's advantage is already firmly established. Every delay gives Brazil more leverage and further undermines U.S. influence in key coffee markets. This scenario demonstrates that effective trade strategy isn't just about production, it's about politics, timing, and foresight. American leaders must act decisively to prevent further erosion of market share and to ensure that U.S. coffee can remain competitive in a rapidly evolving global landscape. Without coordinated action, even traditional strongholds in coffee consumption could increasingly favor Brazilian beans over American offerings. Lessons in global strategy. The coffee crisis highlights the importance of proactive trade strategy. Brazil anticipated market shifts, invested in relationships, and ensured product quality. The US, by contrast, reacted too slowly, leaving American exporters vulnerable. Companies and policymakers alike must study Brazil's approach to understand how to compete in a changing global market. The role of currency fluctuations. Currency rates play a role in this shift. The Brazilian real, paired with strategic government support, has made exports more competitive. The US dollar, by contrast, has seen periods of volatility that make American coffee more expensive abroad. Global buyers are increasingly factoring in currency stability when deciding where to source beans. Environmental and ethical branding. Brazil has leveraged environmental certifications, fair trade programs, and sustainable farming initiatives to appeal to conscious buyers. US producers have lagged in this area, creating a perception problem that further reinforces Brazil's advantage. Consumers are willing to pay more for ethically sourced coffee, giving Brazil an additional competitive edge. The domino effect across markets. Once one major buyer switches to Brazilian coffee, others tend to follow. Contracts are interconnected, and reliability builds reputation. As more international buyers commit to Brazilian beans, US coffee faces mounting difficulty regaining its market share. The shift isn't gradual, it's accelerating rapidly, and every delay compounds the problem. American lobbying and diplomatic efforts. Washington has begun pressing foreign governments to reconsider, but Brazil's multi-year deals are legally binding. Lobbying efforts may influence future shipments, but the immediate crisis cannot be undone. The situation demonstrates that diplomatic timing and preparation are just as important as economic muscle in global trade. The future of US coffee and consumer impact. The question now is whether America can adapt. Innovations in quality, sustainable practices, and logistics will be crucial. Without significant investment and strategic planning, US coffee may continue losing ground to Brazilian competitors, not just abroad, but also in domestic specialty markets that value global reputation. For coffee drinkers, this isn't abstract. Expect higher prices, potential shortages, and changing availability of favorite brands. The morning ritual Americans take for granted is now influenced by global trade wars, tariffs, and international strategy, a reminder that your cup of coffee is part of a global economy. Lessons for industries and Brazil's long-term strategy. The coffee crisis serves as a cautionary tale for all US exporters. Competitors who anticipate market trends, invest in quality, and secure long-term trade deals can overtake historically dominant players. It's a wake-up call for American industries beyond coffee to innovate and strengthen international relationships. Brazil's billion-dollar deals are just the beginning. By fostering strong relationships, promoting high-quality beans, and investing in global logistics, Brazil is positioning itself as the undisputed leader in coffee for decades. This strategy highlights how foresight and planning can reshape entire industries, and underscores the growing reality that global markets reward preparation, innovation, and reliability over historical dominance. Rebuilding competitiveness and market reactions. The US can respond by investing in quality, reducing bureaucratic hurdles, and offering incentives for sustainable farming. Reversing Brazil's lead requires coordinated government and private sector effort, and time is running out. Commodity markets have reacted sharply. US coffee futures have spiked, while Brazilian coffee remains in high demand at premium prices. Experts warn that without a strategic rethink, permanent market losses are likely. Brazil's long-term vision, rather than short-term politics, drives its success, and US leaders must act decisively to protect market share. Technology's role in recovery. Investing in tracking, quality control, and sustainable production is critical for regaining credibility. Technology can improve consistency, traceability, and efficiency, helping US coffee compete with Brazil's well-branded, efficient exports. Advanced supply chain management and precision farming can rebuild trust and enhance product quality. Without embracing innovation, American coffee risks losing further ground, leaving Brazil dominant and securing long-term advantages in the global market. Global implications. The coffee shift signals broader trade trends. Countries willing to innovate, invest, and maintain stable supply chains will dominate. The US, if slow to adapt, may find other industries facing similar challenges. Brazil's rise is a reminder: global markets reward foresight, preparation, and execution. This isn't just about beans, it's about global trade, strategy, and America's declining influence in one of its historically strong markets. Brazil's billion-dollar deals are proof that foresight and investment matter more than legacy. The US must decide, innovate and adapt, or watch market dominance slip away permanently. If you want to stay ahead of global trade trends that affect your everyday life, hit subscribe and turn on notifications. Don't miss the stories that shape the world economy in your morning cup.